What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 10th of 2024. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I want to spend some time to give you guys my brutally honest take on Bitcoin, altcoins, the broader crypto industry, and the broader asset markets as a whole. I think there's some significant warning signs that people are ignoring right now. There's a lot of complacency in the market, and a lot of people are not prepared for a major flush down that could very well play out here over the next week or two. We've got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick off the rambling. All right, guys, I want to dive straight into it here. Let's just be completely honest here. Take a look at Bitcoin's price. As many of you know from my prior videos over the past few weeks, I've talked about this idea that Bitcoin needs to get a significant daily close above a key level, and that's $72,000 to $72,500, give or take, right? I don't want to be too specific on it, but that's generally the range here of where we'd want to see a daily close. And the reason why is because at the end of the day, every single time we've come up here towards around 71,500 to around 72,500 bucks, this has been a range where we constantly get shot down. We are not able to have a significant daily close at that even level of $72,000. And you can just see that every single time. We even had it back here on Friday of last week. And the reason why this is significant here is that while we have support on the 21-day, while we have been able to reclaim that generally bullish indicator here, this is continuing to serve as a range of distribution of sell-side pressure. And it has showcased that over the last 3 months, we have been basically ranging at the same price range. This is, and I want to reiterate again, I know I've talked about it before, but I want to talk about the significance of the fact that this is the previous all-time high range back in the past, roughly speaking, right? Around $69,000, which is where we peaked out last time in 2021. And we have trended at that all-time high from the prior cycle for over 3 months here since back in March of this year. That is the longest, by a long shot, the longest period of time we have consolidated at a prior all-time high from the previous bull market. Okay, so that is a very big warning sign here that there are tons of whales. It's not one player, most likely. It's probably a lot of participants in the market who are offloading positions here, taking advantage of that ability to sell at a much higher price range. And even if we get a breakthrough here, it showcases that there is a lot of supply at these levels versus demand, whereby even if you do get that short-term burst, you get MicroStrategy somehow getting some change under the mattress to go buy more Bitcoin or essentially issuing more debt notes. If you get some news catalyst that makes people juiced up about Bitcoin, it's likely that it's not going to be able to sustain a significant rally above this range, which is a really big point to understand here. What I'm here today to say is that we're likely, basically 66% chance that we're in one of two scenarios. Either we're heading lower here in the next couple of weeks, or if we even do get a breakout here, it's not going to be that significant, right? And this is something, again, I'm not trying to speak in absolutes. There is that 33% chance, I would say, that we really go towards six figures. There's obviously an opportunity for that to happen. I'm not going to speak in absolutes, but for me personally, I lean in favor of one of those two scenarios here, and it doesn't really make me excited to have a lot of extensive risk in crypto assets at these prices. Not to mention, if we start to get a break of that 21-day and come down here to the 100-day pocket and don't find a degree of support like we have back here, that similar price range at 62 to 63K, then that's going to be a really big worrying sign to come down here and retest not only those prior lows of the 200-day, but as we've seen in the past, deviate below the 200-day for Bitcoin. I think that it's imperative to understand that previous cycle analysis, previous expectations for Bitcoin holding above its moving averages and getting buyers at previous levels, so many people will probably cite that, the 200 days usually a great range to buy Bitcoin. We saw that in 2017. But if you even just take a look back here at 2019, right? Multiple times we dipped extensively below the 200-day, even after we hit towards around 65K, relatively close to the prior cycle peak, around 69K. We came down first below the 200-day significantly, whereas the 200-day pocket was ranging around 40,000. We were down here around right under 30,000. So it's very clear that even if we're not in a full swing bear market, that you can expect some significant corrections down below the 200-day. It's the new norm. And that would take us down at current levels, somewhere here around 52,000, which is kind of the range we've been talking about for a healthy moderate correction, potentially all the way down to 47K. That's the range of opportunity I see there. And it's the range in which a lot of traders and investors are not prepared for because they think it's an overly bearish narrative, that they think the ETFs are just this infinite money glitch that's going to guarantee Bitcoin goes up. We may very well see that institutions wait and start adding at a much lower price range if we see clear signs of technical distribution here within price. I take a look also as well at other coins. I think altcoins are really where we're looking to trade. I don't care about making 10-20% return on Bitcoin. Even if you use leverage, the risk profile associated with that is not very favorable at this range. You have much greater risk of the excessive open interest in the market, getting liquidated, trying to go long at these levels. I would wait for much more trend confirmation before I do something like that. But when you're talking about altcoins here, taking a look at the others dominance metric, again, we've emphasized just how quick altcoins can flush down. We had a 32% correction back here in early April, and that could easily play out here again down to the 200 week. I just want you to take a look at the moving averages here. There's purple lines, the 100-day, an inability to hold above there, the 21-day. We're down below the 21-day and the 100-day now, getting very close to testing that 200-day. And as we saw, we bounced both times at this range, but it could very well be that the third time's a charm here. We snap through and we break lower. Again, I'm going to be waiting to see what happens here. If we do show resilience, if we get a nice bounce like we had the last two times off that 200-day, maybe I'll change my tune here. Maybe we'll start actually building some positions for the next couple weeks. But right now, there's no trend. It's been trending sideways here since its capitulative range back here in mid to early April. And if that snaps, we're likely going to the 200 week because that's where the prior support range was back here. That's the last significant support range, around $180 billion. And the 200 week is resting right there, waiting for buyers to come in. That's where I'm getting interested. When people are going to be selling, capitulating, getting liquidated, that's the range that I would be really interested to scoop in some positions. And what do you know? It's a near 50% correction, right? Just kind of clear some of the drawings here so you guys can see it. From top to bottom, it's a nice 50% correction from the prior highs back in mid-March. That would be great. Like a 3-month plus correction, 50% pullback in altcoins. You get some great meme coins at a discount. You get your leading Bitcoin infrastructure plays, AI or DPIN plays at a 50% discount. Again, a lot of people are holding bags or holding positions. They're not ready for that. A lot of people are over leveraged waiting for this to pop higher. And I have to tell you guys, I'm waiting for that capitulation event. Capitulation is where the best buying opportunities can come mid-cycle for further returns. And even if this is somehow, as some people who are on the more bearish end would say, and I'm not entirely opposed to this, but there's a chance that this could have been the cycle peak back here in March. If that is the event here, at least you're entering it in a much more favorable range where you can see, hey, is the 200 week going to hold support or not? And if it doesn't, you minimize your losses greatly than just trying to catch a falling knife or catch something that's slightly below the moving averages. I'll give you some other perspectives here. When we take a look at other coin dominance here, we can see very clearly a snap below the 200 week. The dominance of other cryptocurrencies are really the juicy part of the altcoin market, has never been so weak. It's really been back here since back in August. So this is the weakest point we've had since August of 2023, nearly in almost a year. So that's not looking very good. And it looks like it's trending back down as we did in the last cycle, right? We gave up the majority of other dominance here, then it started to rally going into the cycle peak into May of 2021 and also into January 2022, right? So there is that ability for a potential altcoin cycle to play out, but I think the odds of it are quite low here at this range, or at least it's not favorable to build that position into altcoins just yet. We're going to need a surge of liquidity. We're going to need a new wave of buyers. We're going to need a massive wave of euphoria, and we're not seeing it yet. It's just the cold reality, guys. Week by week here, if you look at it on a monthly time frame, month by month, it has just been red, and we are not seeing people taking the buy the dip opportunity. And if we take a look at it in another perspective, we could also take a look at others' market cap divided by Bitcoin market cap. Clearly looks like we're coming down in here to this long-term accumulation range, which could mean that we have another 15 to 20% correction here, getting close to that 100-month moving average. So there just isn't that momentum yet. And if there isn't that momentum in altcoins, which is where I'm really excited to make those returns long-term, then I'm not really looking to make trades in it just yet. I'll give some clear examples here. All right, let's take a look at the Bitcoin comparative. Like, it's one thing to look at the dollar charts. A lot of things aren't looking very good in dollar terms. but I care at the end of the day as well about looking at how things are doing against Bitcoin. And we can take a look here at some of our top plays here that we've been keeping our eye on. We're not in significant positions in it now, but we are watching for potential position builds. Take a look at Render against Bitcoin, just barely hanging by a thread on that 200-day. Now remember, the last few times we came out here towards the 200-day, buyers swooped in every single time, driving up prices. And now we've been sitting here, to kind of put in perspective, for the last couple days. Notice the difference in the response here. These wicks that came down here, right? The dramatic selling like we saw here on June, and the immense amount of buyers that came in. Even back here at the 100-day, clear reversal here, 30% move against Bitcoin the next day, followed by a couple single-digit days up here to making a substantial move from those lows, pretty much doubling against Bitcoin within a matter of less than a week. Huge bullish response back then. Now, we're hanging by a thread with Render. And this leads me to talking about the important thing that a lot of people aren't considering, which is that you can come below that 200-day to a significant degree. We saw Render come here from around 641 sats, or what, the decimal points don't really matter here, right? You generally are seeing here that Render went from around 647 down here towards 499. And not to mention, Bitcoin wasn't faring too well during July and August of back in 2023. So the USD terms can be quite brutal too. We can see Render from that relative peak went from 293 down here to 125, right? So pretty much more than a 50% correction here in valuations. We're only down here about 34%. So this could really go down to much lower levels than people are expecting. In fact, maybe even testing down towards prior resistance back in December, coming down to big even levels like $5. It's not out of the question for something like that to happen because we've done it before. We've done these types of corrections in the past. And as we move higher and higher here, the question of fundamentals, the question of whether or not there's really going to be buyers at these ranges is coming into question here, right? I think that it's very easy for Render to do a move like that. And I say that as someone who's generally optimistic on this play, so long as the AI narrative is continuing to hold strong. Take a look at Stacks, Bitcoin infrastructure. I had a lot of people, we mentioned Stacks is one of our plays that we've got on our radar. And in the dash report, we talked about kind of the levels we're watching for. But I had some people kind of come up to me and say, Nick, Stacks made this really big move here. We had two solid 11% moves here on the daily candles back in the early part of June, and they're wondering if I kind of changed my tune that it's probably heading lower, but there will be better entry at a lower price range. And I haven't changed my tune at all. Just because we've had this breakup and we're kind of playing game with the 21-day here, we're down below the significant long-term moving averages. And the last time this happened, not only did we have a more significant rebound, but outside of that as well, every single time Stacks has these kind of mid-correction, kind of pumps here for a very short window of time that aren't sustained, where you really see this kind of wick in price, with a lot of the gains fading down very quickly, you tend to see further correction to the downside. I'll put it here in the form of the 2-week. It just becomes so clear. You see these green anomalies here, right, where people are trying to buy the dip, right? Or the market makers are moving it in this way to get people enticed and start building positions. And then they just continue to distribute and sell, right? So my point here is that this can go a lot lower than people think. And I say that as someone, again, who thinks Stacks is one of the best plays that you could potentially buy into on a discount for Bitcoin infrastructure. I just don't think this is the price range to do it. And I don't think that this is enough justification to get really optimistic here, considering that so much of these gains are being faded very quickly. Take a look at Fetch as well. This is another play of interest for me. But overall, Fetch, over the last 3 months, just bleeding extensively here. It's down quite a dramatic amount here, more than 50% from its prior highs back in March. So again, these plays are plays that can continue to do well. We've seen that they have extensive corrections and great rallies, but if you ignore how extensive those corrections can get in accordance to price, sometimes fading down all of the gains that they made over the past couple months, if not the majority of them, you're going to have a bad time trading or investing in altcoins, right? This is where the gains can be made, guys, but you have to be diligent here. If you can't, look out for those corrections, you're going to get chopped up. If you keep listening to people who just say DCA, buy every single dip, buy the 100-day, buy the 200-day, you're going to get chopped up in the market, especially if you're trading with leverage. And I only say that with such urgency because I want to be a friend to you guys. I want to help you guys navigate these markets. I've made so many mistakes throughout my trading and investing career, and it was trying to catch a falling knife every single time. It was the biggest catalyst for me losing money, was just thinking that it can't go lower. That a 30-40% correction sounded great as a buying opportunity, but in reality, it was going down to 50, 60, 70%. And I didn't realize how much more of a dramatic correction that is versus a 30-40% correction. So I know I'm rambling on a bit here, guys, but you get my point that this can really continue down longer than people think and lower than people think. Now I want to go ahead and step out here. Again, as we talked about, when it comes to crypto markets, I'll kind of summarize an important point that you guys want to keep in mind. We talked about the fact that corrections can last longer, they can go lower. I think the best thing is to look for corrective entries below the 200-day pocket and above the 200-week pocket, somewhere in that valuation range. If I come back here to the charts, again, I'm not going to give you guys like all the details here and stuff. We can do some more specific videos on some of these plays. I don't want to spend too much time rambling here. But overall, you can see where generally buyers are coming in during these corrections here. They're coming below capitulation points where a lot of people go leverage long at these moving averages. They get flushed down. You get a final capitulation wave, and you get people coming in at nice big kind of entries here from prior resistance in the past that may become new support. So that's the kind of tips that I would recommend for you guys to look for entries. And these are just 3 plays. There are a lot of other plays out there in the market. There are meme coins that are going to give you even better multiple potential, albeit maybe a bigger risk profile. But it's not so much about getting the absolute right play. It's about knowing when to ride the wave on these different positions and lock in profits when no one else is willing to. This leads me to talking about equities. Now, you guys probably remember, and on the prior video, or maybe 2 videos ago, we talked about the long-term setup for the S&P 500. And I'm going to keep reiterating this chart here, guys, because it is high time to focus on this. This is a chart that has held true for nearly 100 years. And we, just like back in 2021, or back here in the dot-com bubble, or here in the roaring 20s for the Great Depression, we are coming up here very close to the price target that this line of resistance would showcase is likely to be the point where we pull back. Not saying it can't deviate or maybe we get a short-term disruption, but chances are you're looking to top out here around 5,500 points on the S&P 500. And so far, the 3-month here showcasing that June could end off with a bang here. We could really continue here and get a flash rally here with NVIDIA carrying forward the S&P 500 over the next couple days. Apple and Microsoft maybe having some AI related announcements. We don't know what the catalyst is going to be, but I think that AI mania is starting to peak out. And we can see it very clearly here. If we just take a look here at our long-term trajectory here, we are at a similar expansion range to the 2 prior moves for NVIDIA. Again, do we go up here to 140 and get a similar rally from the prior low to top rally back here between 2015 to 2018? Possibly. Do we, have we set in our top here, for example, at a similar range to the prior rally from 2018 to 2021? Possibly. All I'm saying here, guys, is that I feel like the risk on sentiment incentive to go long, to be along these plays, is really starting to fade. And there are a couple visual catalysts of this. It's not just me talking about NVIDIA as a play. You've also got the NVIDIA stock split, right, that's going on. And some will, again, argue that this is not a reason to sell, that essentially you see price expansion here after a stock split. Some will tell you that essentially there's going to be some kind of a correction in the stock. We've seen billionaires from major hedge funds like Stanley Druckenmiller. You've seen Paul Tudor Jones. You've seen a whole range of players out there in the market reducing their NVIDIA stake in the market. Again, this is all the kind of visual cues that you usually find: stock splits, billionaires selling. But at the end of the day, guys, while I could cite these things as a reason to sell, my biggest thing I'm going to be telling you is that you should ignore the headlines. You shouldn't care if Ken Griffith is selling. You shouldn't care if Paul Tudor Jones is selling. I think the biggest thing above all is to watch what price does here, right? No matter if NVIDIA at $3 trillion market is undervalued or overvalued in your mindset, Watch to see what happens on those shorter time frame moving averages, the 4-hour EMAs that we've indicated for meme coins in the past as a momentum gauge, and also the 21-day moving average, which while it is definitely 20% lower from where it's at now, the bigger question is whether or not this is going to start flushing down to the 100-day, the 200-day, or even worse, potentially down to the 200-week, which we have seen in both of these extensive corrections where NVIDIA gets into bubble cap territory, where the forward-looking outlook on earnings guidance is getting too optimistic and falls short in practice. So we've seen this before, and I think it's ignorant for us to ignore these types of extensive corrections, which are over 50% historically speaking. So keep an eye here for something like that to potentially play out. Don't doubt that something like that can happen and that the AI mania can really drag down markets, especially equities as a whole, which have been built up entirely off of the supposed productivity gains we are going to be getting from AI here in the next 2 to 3 years. It's very imperative to keep that in mind here. NVIDIA is now at the valuation range of Microsoft and Apple. We have 3 companies now valued at around $3 trillion, getting close to where 3 companies are amassing a near $10 trillion market valuation. I mean, it's insane, crazy stuff. And do we have the liquidity surplus to really drive this? We've got a lot of money swashing around now, but we don't have the velocity of money that I think is going to drive this forward, right? And I think we're due here, at least for some buffer window before this really continues higher with a healthy correction. And I don't think that that's too much to ask for here, that you could get a revisit down here towards the 200-day. NVIDIA's had extensive corrections in the past, and it could very well likely do it again. When it's trending higher, or you can see in the past here, doesn't spend too much time near that 200-week, right? It's rallying high, it holds the majority of its gains. In some cases, it's not touching the 200-day. In this case back here, in a more moderate rally, it was coming down and touching the 200-day a couple times, right? But this is very similar, I think, to the rally we saw back in 2015 to 2017, where we could consolidate sideways for a little while, but eventually it will be met with blood in the streets. And that's not me being parabolic, it's just history here in accordance to price. Not saying it has to repeat exactly, but I think it's certainly going to rhyme to an extent. All right, so these are some things to keep in mind here, but I come back here again where I know a lot of you guys have your focus, which is in other coins. I think there are a ton of really great opportunities out there. I think, again, there are lots of things that you should keep on your radar. Some of those kind of mid-cap, mid-risk plays, talking about Render, talking about Stacks, talking about Fetch, all those related to either Bitcoin infrastructure, the AI, or DePIN related narratives, meme coins as well. If you guys want me to do an updated meme coins video, I'm happy to do that as well. Just let me know down below in the comments, and we can definitely do one on that. If you see someone else commenting it, drop a like on theirs. We can definitely explore some of the meme coins we're keeping on our radar. But outside of that as well, I want to let you guys know again of the core protocol plays that I think are really essential for you to watch in your radar, both in the fundraising space and outside of that as well in the alternative L1 space to potentially compete with Ethereum, Solana, and some of the well-established L1s that have really, I think, materialized a lot of their multiple potential. One of those plays is Aleph Zero, and they recently launched Alephoria here in the later part of May. This has been one of the big airdrop kind of campaigns that allows you to explore a lot of different Aleph Zero projects and get early stage access towards a lot of these different projects, both in testing out the protocols, but also as well getting rewarded for your participation and your commitment to the protocols. There's a whole range of different plays out there. From Common, which is one of the major AMMs, you have different types of GameFi plays like Darkverse, A0ID for on-chain domain systems, and a whole range of other different plays like Kensu around liquid staking. There's a ton of different ways where you can get engaged in the Aleph Zero ecosystem, and this is one in which I believe, guys, is kind of a silent diamond in the rough. It hasn't been focusing on marketing too much yet. It's just starting to now, and if you can realize where those projects are that are really starting to market, that are really starting to come out there and let people know about what they've been building for the last couple years, and not to mention bring about new valuable opportunities in the market, you're going to be able to catch some of those early stage plays. We've partnered with Aleph Zero here on the channel for some time. I think they're a really great protocol, and I think long term they're going to be one of the few that you really want to keep on your radar. Outside of that as well, I think you guys also need to keep in mind some of the early stage raises that are going on. In this environment, you can't be too protective about finding plays where you're getting in before the exchange listings, before all of the layers, until maybe it hits where, for example, I have access, which are US markets like Coinbase, where things are already going to be trading at multiple $100 million valuations or multi-billion dollar valuations. I want to find plays that are in the multi-million dollar range that are early stage. And Angel Block is one of those platforms that's really going to give you access to those early stage projects. They just launched a new fundraise for something called Squadify. So Squadify is essentially a kind of SocialFi, eToro-esque platform for DeFi and essentially self-custodial money, where essentially you're able to copy trade a whole range of different people in a Web3 fashion. And I think that this stuff is really exciting, having ways to commercialize or make Web3 and DeFi more accessible, and crypto investing for that matter simpler, I think is very exciting. Not to mention it's tapping into the base ecosystem. So again, Aleph0 has been getting plays early on. They did the same previously in the past with Solana-based projects back nearly a year ago. They were really on the cusp of offering opportunities in these emerging ecosystems. They're doing the same with Aleph0. They're doing the same here with Base. This is where a lot of really awesome opportunities may lie. Now, of course, if you do your own due diligence, dive into the project. All the details here are on the website if you want to learn a little bit more about it. But overall, there have been some really cool raises on here. Lingo has been a huge success here from Angel Block. They raised over $100,000 on the platform. Delta Prime closed to successful raise, just shy of around $140,000, so well beyond its soft cap. There are a lot of really cool DeFi protocols, platform plays that are raised through Angel Block. And the great thing about Angel Block as a play, and I think the Thol token overall, is that it's multi-platform, it's multi-narrative. Fundraising overall is a space that is desperately needing to be fixed, and it's tapping into pretty much any ecosystem you can think of that's hot. It's tapping into exciting narratives that are actually trying to build real value in areas that have not been addressed in the crypto space. So that's kind of the things that I'm watching for here when it comes to total market cap. And the thing again is we consider here the fact that we've gone up about 250% here from the lows in total market cap for crypto markets. While I think that there is that opportunity to expand higher over the long term for valuations to go higher here, I think that in the short term, we could be experiencing that correction down towards a range that a lot of people are not prepared for. When I look at significant levels of the past, right, I look back here at the support range back in January 2022. I see along with that as well the lower range of that as well at 150. So generally between 1.5 to 1.8, for the overall market cap, or 1.5 trillion to 1.8 trillion. This is also a range of consolidation here. I think that at a minimum, you're coming down here to this range of 1.8. And as I mentioned, I don't mean to be like dramatic about it, but I think a lot of people are unprepared for that, as it tends to be. Too many people over leveraged, too many people thinking that, cycles will just repeat and bring about the same type of consistent returns that they used to. If we didn't learn anything from 2021, it's that predictability is starting to fall shorter and shorter. The halving events are growing weaker. The required amount of liquidity to drive prices higher at these valuations is just getting bigger and bigger. And that's why you can experience these corrections down to these ranges that a lot of people are not betting is going to play out. If you guys want to know where we're at, we're mainly in cash here. We're getting ready to build some great positions if the right prices come. And it doesn't even mean that I'm here to say that we're at the start of a bear market, but at a minimum, we're likely coming down to a much lower range than people are expecting. That's all I'm here to say. And the inconsistency here over the past couple of weeks, I think, is proof of that. The inability for this to really pop higher is a clear sign of this. So that's it for today's video, guys. Again, as always, if we get that break above $72,000, we will look for potential entries. We'll ride the wave. We'll buy into some altcoins at a great discount and try to beat out the performance of Bitcoin, as we really did back in Q1 of 2024. We did phenomenal, made some great returns, made it for a relatively quiet 2023. But above all, guys, if you enjoyed this video, consider dropping a like, and feel free to drop some comments down below about what you guys think of the markets, whether you agree or disagree. Love to get a conversation going. But until the next video, I hope you guys have a fantastic rest of your week. I'll see you all in the next video. Take care, everyone.